Not long ago, stablecoins were mostly seen as tools for crypto traders, a way to move in and out of volatile assets without touching traditional banks. Fast forward to today, and that limited view is quickly fading. Stablecoins are no longer confined to the fringes of the financial world. They're becoming deeply embedded in its foundation. Major players like PayPal and Visa have embraced stablecoins for payments and settlements. Governments and central banks are studying, and in some cases launching, their own digital currencies modeled on the stablecoin concept. What's unfolding isn't just a trend. It's the early stages of a massive transformation, one that could reshape how money moves across borders, how businesses pay each other, and even how individuals store and use value in their daily lives. In this breakdown, we'll explore what exactly stablecoins are and how they work, the companies and countries leading the charge, why stablecoins are positioned to become a trillion-dollar force in global finance, and what this means for the future of money, from everyday payments to monetary policy. Let's dive into one of the most important, yet often misunderstood, revolutions happening in finance today. What are stablecoins, and why is everyone suddenly talking about them? Okay, picture this. You've got Bitcoin on one side, powerful but all over the place price-wise. Then you've got regular dollars, stable but stuck in slow, old-school banking systems. Now, imagine something right in the middle. A digital dollar that's always worth $1 but moves at internet speed. That's a stablecoin. It's a type of cryptocurrency that's pegged to something like the US dollar. In most cases, one stablecoin equals $1, backed by actual dollars or dollar equivalent assets held somewhere, ideally. And that stability is the whole point. Because while Bitcoin and Ethereum can jump 10% in a day, stablecoins are built to hold steady, making them way more usable in real life. Why are people using them? Here's the thing, stablecoins aren't just for crypto nerds anymore. They're becoming the digital money of choice for all kinds of real-world uses. Sending money to someone on the other side of the world instantly and way cheaper than banks or apps like Western Union. Buying and selling crypto without going back to fiat every time. Traders love stablecoins because they make moving in and out of positions quick and easy. Doing business across borders without jumping through banking hoops or waiting days for payments to clear. Getting in and out of the crypto world fast. They're often the first step when people exchange dollars for crypto or cash out. Basically, if Bitcoin is digital gold, stablecoins are digital cash. Who's leading the stablecoin charge? Right now, 3 big names are dominating. Tether, USDT. This one's the OG. It's the most used stablecoin globally, especially in emerging markets where the local currency can be shaky. USD Coin, USDC, more transparent, more regulated. Backed by a US company called Circle, USDC is often the preferred choice for institutions. PayPal USD, PYUSD. Yep, that PayPal. They launched their own stablecoin in 2023, which means we're way past crypto-only territory now. Big tech wants in. Bottom line, stablecoins started as a tool for crypto traders, but now they're quietly becoming a backbone for the next generation of money. Fast, cheap, borderless, and most importantly, stable. And that has big implications for payments, global finance, and even how governments think about money itself. Why stablecoins are a game changer for payments. One of the biggest reasons stablecoins are gaining traction. They work 24/7 in real time, something traditional banks still can't offer. No more business hours, no more waiting days for a wire to clear or dealing with clunky ACH systems. With stablecoins, money moves at internet speed. Big names like Visa and MasterCard are already on board. Visa, for example, has started settling some transactions using USDC, a major stablecoin pegged to the US dollar. It's a signal that traditional finance isn't just watching, it's adapting. Meanwhile, Circle's USDC payments network is enabling merchants to accept digital dollars instantly, without middlemen or banking delays. The benefits? They're hard to ignore. Near zero transaction fees, instant global settlement, No more wire transfer delays or bank cutoff times. Stablecoins are quietly turning the payments industry on its head, making money movement as fast and flexible as sending a text. Stablecoins are quietly taking over. You might not hear about them on the news every day, but stablecoins are becoming one of the most powerful forces in global finance. Right now, there's over $150 billion worth of stablecoins in circulation, and that number is growing fast. Experts say we could be looking at $1 trillion by 2030. This isn't just crypto hype anymore. This is real money, moving at internet speed. In fact, some days, stablecoins move more money than Visa. Think about that. A decentralized network of digital dollars, sometimes outpacing one of the most established payment giants in the world. But the real story? It's what's happening outside the headlines, especially in emerging economies. In countries where inflation is out of control and banks can't be trusted, people are turning to stablecoins as a lifeline. They're using them to protect their savings, to get paid, to send money, and sometimes just to buy groceries. And here's the kicker, you don't need a bank account. All you need is a phone. For millions of people, stablecoins aren't just a tech innovation. They're a better version of money, simple, fast, and finally, under their control. Who's leading the stablecoin race? Right now, 3 names are shaping the future of stable digital money, and each one brings something different to the table. Tether, USDT, is the most widely used stablecoin in the world. It's especially dominant in regions like Asia and Latin America, where access to US dollars can be difficult. Tether focuses on speed, liquidity, and broad support across global exchanges. It's not the most regulated, but it's everywhere, and that makes it powerful. USD Coin, USDC, takes a different approach. It's based in the US, fully compliant with financial regulations and backed by transparent reserves that are verified monthly. Institutions, fintech companies, and developers often prefer USDC because of its trust factor. It feels closer to traditional finance, but with all the benefits of crypto. Then there's PayPal USD, PYUSD, the first real move by a major tech company into the stablecoin world. With PayPal and Venmo directly integrating it, that's over 400 million users who suddenly have access to a stablecoin without even realizing it. PYUSD isn't just aiming for crypto natives, it's built for mass adoption. And this space is heating up fast. Companies like Stripe, Shopify, and others are building out stablecoin rails, the infrastructure that will let people send, spend, and receive digital dollars across the internet just as easily as we send an email. Governments are waking up to stablecoins. Stablecoins have gotten too big to ignore, and now governments are racing to catch up. In the US, lawmakers are finally working on rules that would define what stablecoins are, who can issue them, and what has to back them. The focus is on making sure they're safe, liquid, and honest, especially if they're going to be used by millions of people. The EU is a step ahead. Their MiCA framework already includes stablecoin oversight, with clear rules about audits, reserve requirements, and how they're managed. Over in the UK, regulators are going even further. The FCA is considering bans on buying crypto with borrowed money, trying to cut down on risky behavior tied to volatile assets, including some stablecoins. So what's the concern? It boils down to trust. Governments want to know, are stablecoins really backed by something solid like cash or short-term US Treasury bills? Will that money be available in a crisis? Or will people get stuck? And is there real transparency? Can anyone actually see the reserves and audits? This is why there's so much heat on Tether, USDT. It's the most used stablecoin, but its reserve reporting has been criticized for being murky. On the other hand, USDC gets points for clear disclosures and regular audits, which is why banks and fintech companies tend to prefer it. Bottom line, governments want stablecoins to succeed, but only if they play by the rules. For consumers, imagine sending money anytime, anywhere. No banks, no delays. Crypto enables 24/7 payments without a middleman. In places where the local currency isn't stable, access to digital dollars provides real security. And for families sending remittances home, lower fees mean more money in the hands of loved ones. For businesses, merchants can settle payments faster, cutting down on wait times and freeing up cash flow. With blockchain transparency, fraud and chargebacks drop, and accounting becomes clearer and more efficient. Programmable money unlocks new business models once thought impossible. For investors, in volatile markets, crypto can serve as a stable store of value. It also offers a vital liquidity layer, powering seamless trading and participation in DeFi ecosystems, all without relying on traditional gatekeepers.